Okay, all good now.
All right. Okay. Good evening to all participants of tonight's webinar. My name is Sukma. I'm part of FSMOne Client Investment Specialist team. Together with my colleague, Mr. Sean Lian, I want to share about the FSMOne regular savings plan feature that can be a good investment strategy for volatile times, like right now. Before we proceed, we take a look at the disclaimer. To summarize this slide is actually, please take note that all funds, stocks, or ETF chosen during this webinar are not recommendations to sell from our team. They are all for example purposes. Please seek professional advice from our advisors or specifically from our client investment specialist team before you make any investment decision. Moving on. All right. What is FSMOne regular savings plan? Basically, it is an automated deduction feature that allows you to invest in unit trust, managed portfolio, stocks and ETF, the products that we have on the platform, with a smaller investment amount via the platform. So it allows you to invest rather than forking up quite a large initial investment amount. It allows you to basically invest as low as 100 ringgit. You may choose, there's also an option, you may choose to invest on a monthly, bi-weekly, and weekly basis. This is also another feature that we add. Previously, you can only do RSP for monthly basis. Now, you have an option to do as a bi-weekly or weekly investment. The main idea behind RSP, the regular saving plan, is to invest in a consistent manner based on the dollar cost averaging concept. Okay, since we touched on that, what is dollar cost averaging concept? DCA simply means it refers to an investment strategy where you invest a fixed amount of money periodically. So instead of making one hefty investment or a lump sum investment and risking the market crashing right after you make your investment, you could make a smaller periodic investment and mitigate that risk. Let's say you have 10,000 ringgit set aside for investment. And then you can invest this 10,000 into products such as unit trust, stocks, or ETF. You could make a lump sum investment. However, in order to do this, you really need to time the market to ensure that you do not take so much risk. The market could crash during the following week or month, which is we never know. So that can actually left you with significantly less money from your initial investment. All right, let's since that we talk about DCA, there are essential parts of DCA that I would like to share tonight. So the DCA is actually a fairly common investment strategy. It's nothing new. It's been done for a long time. Basically, when you topping up money, a consistent amount of money inside any of investment product, you are actually doing a DCA. Instead of investing 10,000 ringgit in a lump sum amount, you can make 10 investment of 1,000 ringgit on a monthly basis, for example. This DCA can actually mitigate the risk of significant losses. I will explain further how DCA can actually help you to mitigate the risk. It's also an effective strategy for those who wish to build their portfolio gradually. This is actually a really good strategy for a new investor. Meaning, of course, when you are new to investment, you do not want to invest a huge amount of money into something that is unknown. So might as well you test the market by invest into a certain reliable product or ETF, stock or ETF, and watch it grow gradually. DCA eliminates the gamble of timing the market, which is really something that you like to avoid when doing investment. Investment is not a gamble act. It's actually an act of calculated risk-taking that really need some sort of research first, rather than going into it without not knowing what type of product that you're actually buying. DCA also allows you to gradually build your portfolio, hence motivating you to maintain interest, rather than you invest in a lump sum amount and you losing money. And then this happens a lot to new clients. This is the feedback that I receive normally, stating that when I make a suggestion, they will say that they do not want to invest any further because they are losing money, especially within this period where the Russian and Ukraine crisis is really affecting all the global market as a whole. So DCA will actually helps you to maintain interest on the investment, because you will see that the performance of the fund or your portfolio size grow on a monthly basis, and then you will see that if the market recovers, then you will see that rather than waiting for a long time for your investment to recover, you will see that the recovery will be significantly faster rather than doing a lump sum investment. Last but not least, but really important, it helps investor to create a good habit of saving periodically and consistently. That's the most important part, consistent. Sometimes when we invest, we really at the start we're really motivated to invest, but the volatility of the market sometimes will actually will not make you we can say that not interested anymore to invest because you're losing money. So consistency is actually key in making a good investment works. Okay, let's moving on. Is DCA an effective strategy? Okay, the fear of entering the market at the wrong time can lead to inaction or hasty decision. Meaning, if you enter at the wrong time, then there's a high chance that you would like to get out of the market and cut losses rather than wait and be patient for the long run. For example, DCA is actually can smooth out fluctuation of the market as you buy more units when prices fall and fewer units when the prices are rising. It also can be considered as a long-term strategy. Barring adverse circumstances, it helps you gradually build up your holdings of a particular investment over an extended period of time. From an emotional perspective, DCA will keep things simple. You set an amount, and then that amount will be invested accordingly to your preference frequency, maybe monthly, bi-weekly, or weekly basis. Regardless of market fluctuation, you invest the same amount of money each month, for example. So as long as we are really disciplined to stick to the strategy, you will be less emotionally affected by market volatility. and then less prone to making rash investment decision. So you will stay invested, and then you will believe that this strategy can actually benefit when once the market recovers, then you will see that the recovery is much faster. All right, let's moving on. This is actually a simple example that I can share today. For today's, I've chosen SPDR Straits Times Index ETF that is trading in the Singapore market. So let's say an investor invests $1,000 per quarter for easy understanding. For 1 year, we have 4 quarters. So per quarter, they invest $1,000. Now, the price of the ETF may change each month, but the amount invested never changes. So if you see the market price when it drops, the shares purchase is more. If the market price increase, then the unit shares purchase reduce. Overall, let's say, for example, theoretically speaking, as long as the ETF increases in price over that time period, the investor will have successfully used DCA to receive a positive return on his investment. So the key is stay invested with using the same amount and stay consistently with the strategy. Okay, all right. For the next slide, I've picked a chart, meaning this is based on past historical data, meaning I look for a pattern and then select some time period. So the chart that I've chosen for situational comparison is a downward chart, a V-shaped chart, meaning there's an up and down in the market, and then the last one is an upward trend chart. So let's take a look at the first one, the downward chart. The downward chart is actually I've chosen the index that I've chosen is called MSCI All Country World Equity Index, and then the selected time frame is from 1st of October 2007 and then until 27th of February 2009. This is I've chosen this because to show you that in a downward trend, after the calculation being made by using previous data, you will see that the comparison between lump sum investing and dollar cost averaging, as shown on the slide, the lump sum investment of 10,000 ringgit initial investment showed a very significant losses, around 57.7%, while DCA investment managed to at least record a lesser loss percentages, which is around 32.54%. So what does it mean from this situation? In a downward chart, if you do a lump sum investment, meaning if the market goes south, meaning you will lose a lot. But if you invest gradually, the losses recorded is actually much lesser, because when there's a downtrend, you buy into a cheaper unit value, then it will actually lower down your investment cost. That's how DCA works in a downward chart. Please take note, there is no such loss-proof strategy for your investment. Even no matter how well you are doing DCA or using a different strategy, there's no such thing as even in a downward trend, your investment will show no loss amount. There will be loss amount, but the amount will be lesser if you're doing it correctly. All right. We proceed with the second chart. For example, I'm I've chosen the same index, MSCI All Country World Equity Index, as an example. The time period, it will be longer. Should be around 6 years. If the V-shaped chart period chosen was September 28, 2007 until December 31st, 2013, around 6 years. So let's say, for example, if you buy at the top part of the chart on the left hand side, if you buy at the top, it will take you around 6 years for you to recover back your money if you're doing lump sum investment. But within the same period, even though the market is down and going up again, if you're doing DCA, you can at least gain a profit, which is more than the lump sum investment. So it makes your investment worthwhile rather than put in a lump sum amount at a wrong time. Then it will take you a long time for the market to recover and for you to receive back your money, your capital, basically. So the last one, situation comparison and upward chart. By using the same index again, I selected a period from September 30th, 2011 until October 31st, 2017 to show an upward moving chart. In any upward moving market or bull market, the lump sum investment strategy will outdo DCA, meaning you enter the market at the lowest point, for example, and then when the market going on uptrend, of course, you will gain more by doing a lump sum investment compared to DCA, because when you're doing DCA, meaning you will stay invested consistently, you will make a return, but if you like to compare, the lump sum will actually gain you more. In this case, the lump sum investment managed to do to record a return of 117.18% compared to only around 73.17%. Okay, this is a rough idea how DCA works. Of course, it's not perfect, but in a downward trend, or it's in the V-shaped chart, you can say that the strategy basically can actually help you to stay invested, stay positive, and you will see that you will can actually reap the reward at the in the long run. All right. Since we talk about DCA, so what you need to know before you using this strategy is actually two things. You must have the discipline to stick to it. That's the most important part. Following this strategy means you cannot increase your position when the market is doing well, meaning you pay more or top up more when the market doing well, and reduce your investment amount when the market is not doing so well. So it doesn't work that way. So consistent investment amount is the key, and then you need to stick to that amount in order for DCA to work. All right. The second one would be you still must choose the right investment. So any kind of strategy, you need to choose the right type of investment. This is the important as well. If you are using good strategy for a bad product, bad investment market investment instrument, then it will not work. So DCA does not spare you from the work of choosing an appropriate asset to invest in. Any DCA done at a bad investment is still a bad investment. Many investors use DCA as part of passive investment strategy, meaning they invest in passively managed index fund, which is ETFs, that track an entire market. So this is the key. Choosing the right ETF by using DCA, then you will see that the strategy is actually will work or you can say can match your investment goal. All right. So since I talked a lot about DCA, so now we go back to the main focus of today, which is FSMOne regular savings plan. All right. So as I mentioned at the start, it allows you to invest in minimum investment amount, really low amount. We do have several type of product on the platform, which are unit trust fund, managed portfolio, and stocks and ETF. So the initial investment is all 100 ringgit. But for managed portfolio, you need to make the initial investment, which is 500 ringgit. And then after that, you can start your RSP via the platform. Okay, as mentioned quite a number of times just now, deduction frequency will be monthly, bi-weekly, and weekly. By monthly, it will be deducted on the 15th of every month. So if 15th of every month falls on a non-working day, then it will be done on the next business day. Bi-weekly, it will be done on every alternate Wednesday. And weekly, the deduction will be done on every Wednesday. Moving on. This is the important part as well that you need to know before starting an RSP plan with FSMOne. The fees are, for unit trust fund, the fees will be ranging between 0% to 1.5% maximum. Managed portfolio, 0% to 1% maximum. For stocks and ETF, it depends on the market. So for Hong Kong exchange, we do have ETFs, RSP for ETFs under Hong Kong exchange and US exchanges. So the charges is quite simple. For each buy for Hong Kong exchange is 0.08%, minimum 5 Hong Kong dollars. For US exchange, the amount is 0.08%, minimum $1 US dollar. For when you sell, the charges is actually the same, 0.08%, minimum 5 Hong Kong dollars. And for US exchanges, 0.08%, minimum $1 US dollar. All right. So let's moving on with the method of payment for FSMOne RSP. You can actually apply RSP via several payment methods. We do have options. You can actually deduct the money from our parking facility called cash management fund. The cash management fund allows you to do a weekly deduction, bi-weekly, and monthly deduction. You can also use FSMOne cash account for weekly, bi-weekly, and monthly deduction. Lastly, you can use FPX e-mandate, but it only for monthly deduction. What does it mean by FPX e-mandate? So basically, it's actually the deduction will be done straight from your bank savings account via the online banking. So you can choose to deduct RSP via the FPX e-mandate. The process can be done 100% online, and then no more forms are required. Previously, we required hard copy forms. Now everything is done online. So much easier for you to start your RSP, deduct your money straight from your bank account. So I will share with you how to set up the FPX e-mandate process. So as for the cash account and the cash management fund, basically the concept is simple. You need to top up funds inside those parking facilities. Once the money is there, then you can set up your RSP already. But for FPX e-mandate, the steps is slightly different. So I will share with you in today's webinar. The first step, of course, you need to log in into your FSMOne account and then look for RSP button there. All you need to do, click on it. It will show you this part. So it will come to the regular savings plans page. You look at the right side, click on apply new RSP. Once you click on it, the system will ask you to select which fund that you plan to buy. Meaning, just to share with you as well, for unit trust fund, or meaning not all funds that you can do RSP. Meaning only selected funds that on the RSP special list can make the RSP possible. Okay, so after you complete the process, you as a payment method, you need to choose FPX e-mandate, right? Once you choose that, you can click on apply new e-mandate, and then the bank, there's a pop-up, will ask you to select from which bank the money can be deducted. Once you select the bank and once you click submit, the page will be redirected to the selective online banking page. I mean, let's say, for example, you choose Maybank and then you redirect you to a Maybank to you page, and then they will ask you to key in the TAC number, and then you complete the process. That's all, as simple as that. Okay, so for RSP, of course, there are cases that the client forgot to top up money inside the cash account, meaning there's an insufficient balance in the bank account, for example. So the client have many bank accounts, but unfortunately, one of the bank's account for that being assigned to do the RSP, the funds is not enough. So what will happen? So if there's an insufficient balance in your cash management fund holdings or cash account, FSMOne will partially create the RSP based on the balance. This is different for bank deduction or FPX e-mandate. We will not partially process the order. Okay, and then please be informed that your RSP application will be terminated after 3 times consecutive unsuccessful deduction. Meaning if for 3 months or 3 weeks, 3 bi-weekly, 3 times bi-weekly, for example, if the RSP is not successful due to insufficient balance, then it will automatically terminated. Okay, so for the next slide. Okay, is there a reminder for insufficient balance? For cash management fund, FSMOne will send you a reminder email on the 5th of the month for monthly contribution, and every Thursday or alternative Thursday for weekly and bi-weekly contribution. You are advised to top up your cash management fund 4 business days before the contribution day, which is the 15th of every month, to ensure a successful transaction. For example, 15th of every month for monthly, and then for cash account, no reminder email will be sent to you. Please ensure that your cash account has sufficient balance at least 1 business day before the contribution date. Lastly, for FPX e-mandate, we advise you to check on your bank's balance 4 business days before the 15th of every month, for example, to ensure that there is sufficient balance for the contribution. Okay, so this concludes my sharing for the you can say that theory of RSP and DCA. So I will let my colleague, Mr. Sean Lian, to walk you through the step to start your RSP through multiple products that are on offer via FSMOne platform. Over to you, Sean.
Okay, thank you. Thank you very much, Sukma. Okay, good evening, everyone. I'm Sean. So let me share my screen. Okay, I will walk you through the ETF RSP, which is the latest feature that we have currently in our platform. So I will walk you through what is the feature and how do we apply for this ETF RSP. So before I proceed further, currently I would like to highlight to you all that currently we are launching the promotion for this new feature, which the first 300 subscriber, you are able to enjoy 0% processing fee on the first ETF RSP contract that you created for 1 year. Means from June 2022 to June 2023, the first ETF RSP contract that you created in our platform, you will enjoy 0% for a period of 1 year. Okay, without further ado, I will proceed and teach you how to create the ETF RSP. So after you log into the website, there's two methods that actually you can reach to the ETF RSP application page. The first one, actually you can point to ETF, and then under transactions, you can click apply RSP and reach to this particular page. So under this ETF RSP page, we will list down all the available ETF that we have selected that you are able to invest under the regular saving plan. So this is the list that we have currently. Currently, we only offer to 10 US ETF and 10 Hong Kong exchange ETF. So this is all the list that we have right now. And then going forward in future, actually we will try to add in more famous ETF or more profitable or more valuable ETF in the ETF focus list. So for a start, currently we have 20 ETF for all the investors to apply. So beside you can reach from here, there's another way that you can reach, which is when you point on your personal menu, you are able to click on this RSP. So when you click on RSP, you are able to see these two buttons. So you are able to apply new RSP over here, or you are able to view your ETF scheduled sale transactions. Okay, let me explain what is how the ETF RSP works. So for ETF RSP, right, because as what Sukma shared just now, the minimum RSP amount actually is 100 per month only. So what if, for example, this particular ETF actually is cost, right, for example, 100 USD per share. So how do we actually buy into this particular ETF for investor? So when you apply for this ETF RSP, so we only accept cash account in MYR as payment method, which is minimum 100 to any amount that you would like to put in. So when it comes to the transaction date or contribution date of this ETF RSP, so what our company will do is we will help you to convert your 100 to the respective currency. For example, this is under Hong Kong D. Then we will help you to convert 100 to the closest unit that we are able to buy for you. So meaning to say, your 100 will be fully utilized to buy into this particular ETF, and your ETF will have fractional unit. Means after we buy that particular ETF, it will be under decimal point. So I will show you the example later. And then what is the meaning of scheduled sale? So because when you go for ETF regular saving plan, so there's definitely that you will have a lot of fractional share for all the ETF that you have invested in. So scheduled sale allow you to sell your fractional share in the market, in the stock market, because normally when it comes to those exchanges, they do not allow investor to trade fractional share. So this one I will explain. I will show the example to you later on. So okay, from here actually we are able to click apply new RSP to continue to our application. So it will link you to the same page over here as well. So from here actually you are able to choose from different products that we have for regular saving plan. So for example, if we go for ETF, so we are able to select the ETF from the available list over here. So I will show you how to create a new application under this regular saving plan. Okay, so for the amount, I will put the minimum 100, and then frequency, actually investor, you are able to select based on the contribution frequency that you prefer. For example, if I select monthly, and then over here will show you the regular saving plan processing fee, which is 0.08% and minimum Hong Kong D $5. So you will notice that actually the processing fee for ETF regular saving plan, the minimum contribution, the minimum processing fee, actually it will be a lot more lower than the regular, it will a lot more lower than when you trade like normal in the exchanges, if you compare to the regular saving plan. Okay, then after that you can add to cart. Then I can select another one. Okay, for example, VOO. I can select another US ETF over here, and I select bi-weekly. So you can select as much as ETF that you want and set for all the application. And after you settle on, then you can click proceed to check out. So one tips to you that actually for our website design, right? Whenever you want to proceed to next action, you just need to find the button with a dark blue color. Then actually this will be the next actions. So now we click proceed to check out, and then we are able to check, double confirm the application that we created just now. If there's anything that you want to edit, you are able to edit over here. So you can change the amount accordingly and update the card. Then the card will reflect the latest edited amount. So if everything is okay, then we will show you the total regular saving plan amount, and you are able to submit your transactions. So of course, we will show you these important notes every time when you make any, when you want to proceed for any purchase order or check out for any payment, because under Bank Negara rules, we only can accept the payment from bank accounts under your names only. So we do not accept any payment from third party. So that's why these important notes will pop up every time when you want to check out. So then we can click confirm, and then you will get the DAC code. Okay, you're on now. Sorry, let me get my phone. My phone is outside. Sorry for a while. Okay, sorry, I'm back. Okay, so after I key in the OTP code, basically the order is received. Then I'm able to check the regular saving plan that I created just now. So you will add in over here the regular saving plan that I created just now. For example, VOO, is available over here. And then they will show you what is the next RSP date over here. So over here, what you can do is actually under the action button, we are able to edit the regular saving plan or terminate the regular saving plan as long as before the next regular saving plan date. Okay, so let me show you. So, okay, for example, if I want to edit for this particular RSP, I can edit accordingly. And then I can also edit the frequency and update. So it will immediately show the amount that I edited and also the frequency that I edited just now. And then, okay, what if I want to cancel off? So also the same step, I can just click terminate RSP and confirm. Then the particular RSP, it will be deleted from these RSP applications. And then, okay, then I will share on how do we create the scheduled sell transactions. So for scheduled sell transactions, you can create the sell order through the action bar over here. For example, if I have, let me check what is the holding that I have right now. Okay. Okay, so under ETF, I have these 3 holdings, which two of these holdings, Hong Kong Bank's ETF and also the First Trust Cloud Computing ETF. Actually, I bought it through the ETF RSP. That's why you will notice that actually the quantity will be in fractional unit. So you will have decimal point at your quantity. So meaning to say, for those fractional units that I have in my holding, I'm not able to trade in the normal trading or I'm not able to trade under the exchange. So what I need to do is I will need to create a scheduled sell order and let FSMOne to sell on behalf of me. So this is how I create the scheduled sell order. From here, you're able to select sell. So under the sell order pad, there will be the 2 selection for you to select. But because of my unit actually is a lot more lesser than the normal board lot unit. Because for a round lot actually is 200 unit, but currently I only have 28 unit. That's why I'm not able to select limit order and sell in normal exchange. So what I need to do is actually I can only select schedule to sell. So the schedules to sell, actually we will only have schedule sell on monthly basis, which is on 15th of every month. So you only, when you place the scheduled sell order, we will only help you to sell your fractional unit on 15th of every month. So in order for us to collect all the unit that investor that want to sell, then we will sell it in the exchange at one lump sum. So this is how the scheduled sell order works. So after I selected and I can key in what is the unit that I would like to sell. For example, I would like to sell 10 units. So I can just place the order and confirm the order. So the order, it will place automatically. And then but the order will stay in pending. Let me show you. So when I go back to RSP page and click View ETF Scheduled Sell Transaction, then the transaction that I created just now, 10 unit transaction, it will fall under the pending transaction tab. So from here, it will stay under pending because today is just 9 of June. And then that particular scheduled sell order will only be transacted on 15th of the month. So you can always come to this page and click details to decide whether you want to cancel the schedule start order or modify the schedule start order. So if I click modify, I'm able to change the quantity accordingly based on the available quantity that I have. So by doing this, it will help me to amend the schedule start order that I placed just now. So it will reflect the latest editables unit over here. And from the page, from this RSP page, basically you are able to apply the regular saving plan over here and view your ETF schedule sell transaction over here. And then I would like to share with you there's another one more place for you to check your pending transaction accordingly, which is from trade. So when you click on trade and you select stock and ETF, those stock and ETF order that you place right now, actually it will be available in your order book. Like for example, the schedule start order that I placed just now, it will be stay as pending status over here. So I also can modify the order or cancel the order in this particular page as well. So this is all I have for the ETF regular saving plan, for the how to apply for the application and how to sell your application. So another thing to note is for schedule sell order, basically you can only sell the 20 ETF that available for the ETF regular saving plan. So I think that's all that I have. So now actually we are open for we are open for the Q&A. If you do have any question, feel free to use the Q&A box, the toolbox, and put in your question. Okay, I have one question over here. Okay, for example, if I have one share of ETF, for example, VTI, around 100 RM, but if my RSP investment for ETF VTI is only 500 per month, how would this RSP works? Will Funds Supermart invest every 2 months for us? Okay, as I explained just now, so for all the share that we buy under the ETF, it will have fractional unit. So when you place 500 per month for this particular ETF, then we will fully utilize the 500 RM to help you to buy accordingly for that particular ETF. Okay, currently I have another question from Rachel. Now is 0% promo. What will be after the promo? Okay, basically the promo for the ETF regular saving plan over here is only applicable for your first ETF RSP contract. So this is only applicable for the first contract, but later on the charges I can show you over here. The processing fee will be the processing fee for regular saving plan for the Hong Kong exchange, it will be 0.08% or minimum Hong Kong D $5. Whereas for the US exchange, it will be 0.08% or minimum USD $1. So this will be the processing fee. But of course, there were also other fees that the normal fees that that you will need to pay when you trade in those exchanges, which is the stamp duty and others charges that exchange charge you. Okay. Next question. Where do we analyze or see which ETF is doing well on this platform? Okay. Let me show you for ETF. We do have, under the ETF tab, we do have the ETF focus list and ETF idea. So let me show you how ETF focus list work. So for ETF focus list, our research team, our regional research team are basically all the research team in Singapore, Malaysia, and Hong Kong. They will gather together and pick the best ETF in the particular sector and put under this ETF focus list. So under this ETF focus list, you are able to select what is the tactical play that you would like to invest. Actually, you can search from here. You can search the available ETF that we recommended by our research team from here, or you are able to check the core equity, fixed income, or single market equity. For example, India, Indonesia, Brazil, Taiwan, Hong Kong, or by regional basis. So you are able to, we already help you to lower down the selection from, I think, more than 3,000 to 4,000 ETF to this particular focus list. So you can refer to this focus list for more information. Besides, you can also always refer to the ETF idea. ETF idea actually is the article that actually written by our research team. And then they will show the latest idea on all the ETF insight that we have or that we have researched. So you are able to check from these two lists, then you will get some ideas. Okay, next question. What is ETF and why we invest in ETF for which risk portfolio? Okay, basically for, I think this one is a little bit out of topic, but I will try to share with you what is ETF. Basically, ETF is exchange traded fund. Exchange traded fund, you can, basically ETF actually is almost the same as unit trust fund. But the difference between unit trust fund and ETF is unit trust fund actually is managed by fund manager. The fund manager will manage the unit trust fund actively. Means they will select the fund and help you to contribute into the stock selection that they place or that they select when they invest. But however, for ETF, the fund manager, they were just invested in indexes. Means, for example, they were just selected to invest in S&P 500 indexes. So, meaning to say that ETF, you will be by more passive way of investment. But if you compare both ETF and unit trust, both are also the cumulative kind of investment because they are invested in various stock counter, meaning to say it can be 20 or 30 or 50, a more diversified kind of investment. Okay, do I need to convert US dollar in advance for US dominated ETF in my cash account? Or, okay, for ETF RSP, basically what we do is the only payment method for this ETF RSP is MYR cash account. So meaning to say you only can select what is the amount in MYR that you want to invest, and then when come to transaction time, we will help you to convert to the respective currency accordingly. For example, Hong Kong D or USD. We'll help you to convert accordingly and buy into the particular ETF. And then, okay, And then when come to schedule sell order, when we sell off the ETF for you, the amount that you will receive, actually, it will be under the respective currency. Okay, for example, if I sell the US stock that I bought just now under the schedule sale, so after the transaction done, and then I receive the money maybe 3 to 4 business days later on, the amount that I receive will be in USD. And then that particular amount, it will be credit in my Fund Supermart USD cash account. Okay. Another question, can sell ETF at any time? If sell today, then the transaction will be completed. Okay. Basically, when you trade ETF or buy and sell ETF, it can be at the same day, meaning to say you are able to trade freely in the exchanges. But however, when it comes to the ETF regular saving plan, means if you want to invest in a smaller amount under the regular saving plan, then actually you cannot buy or sell freely. Because for regular saving plan that currently we only have 3 contribution frequency, meaning to say you can only select invest by weekly, bi-weekly, or monthly. So like what Sukma shared just now, weekly and bi-weekly will be on Wednesday and alternate Wednesday. And then monthly will be on 15th of every month. So this is the date that we will help you to buy in the particular ETF. And then for scheduled sale, it will be on once every month, which is on 15th of the month. If you have fractional share to sell off, then you will need to create under the scheduled sale, and you will need to wait 15th of the month in order for us to transact your transaction. But however, if you have a full lot in your holdings, meaning to say, because the regular saving plan, actually you are invest regularly. For example, you invest 100 every month, but after 3 years, of course, the unit that you accumulate, it will be have full lot unit already. For example, 50.35 lots units. Then actually the particular 50 units, you can choose to sell in the normal trading, means you can choose to sell at any trading hours in the exchanges. So that one is without the limitation that you only can sell on every 50. But of course, for the fractional share, you only can sell using the scheduled sale. And then one more thing to share is for scheduled sale function, not only can sell off your fractional unit, you can also place the order if you are okay for any price on 15th of the month. Basically, if you have 50 unit 0.35, you can place the whole lump sum, means the whole unit 50.35 under the scheduled sale. We are able to help you to sell accordingly as well. Okay, I think I will take a last question. Okay. For sales of ETF with fractional unit, will all the unit be sold and zeroized ultimately? Okay, it will depend on the unit that you key in. Like what I shared just now, right? Basically, if I have 28.315 unit, I'm able to just key in 0.315, or even I can place 10 unit or 9 unit, is up to me. But if you want to totally clear off your fractional unit, then you will need to key in the full amount. Then we will help you to sell accordingly. Okay, I think this will be the last question that we have. So thank you, everyone. Thanks for your time today. And then also thank you, Sukma, for his sharing on the regular saving plan feature in our platform. So thank you very much for you all to spend this evening with us. So thanks, everyone. See you again. Bye-bye.